if you heard us speak last year or you heard the presentations that were going out, we talked about how we'd made recently a big investment into the music royalty sector, which is a bit of an unusual asset class. Just to run through what it is, so music royalties is literally buying the catalogue, the pop song catalogue of Beyonce or Justin Bieber, and you own that catalogue, and every time the songs are played on the radio, or these days, more importantly, on Spotify or digital consumption, you earn a royalty. And 4 or 5 years ago, when interest rates were really, really low, it was a really attractive asset class. The value of these music royalty portfolios was going up in time. At the same time, you're earning a really attractive coupon, 7, 8, 9% to sit there and own the catalogues. And you can see the sort of the backdrop in the music industry as it's going on. So this bottom right chart shows where people have made money in the music industry over the last 50 years. You can see with the lovely Emma's help. So the first wave is vinyl. Then you have cassette tapes. Then the big peak and crash is CDs, and the market, is incredibly exciting for a while. And then everyone realised or learned how to pirate CDs, and that all the money disappeared. More recently, what's gotten everyone excited is digital consumption. So all the kids today on TikTok, on Instagram, Apple Play, Spotify, there's been an enormous growth in music consumption as a good, growing at sort of 15% a year every year for the last 5 to 10 years. So a lot of money, a lot of private equity money's come into the space. It's got a very kind of favourable tailwind, and people are quite excited about it as an asset class. During that kind of hubristic phase, a couple of companies listed in London, and their sole purpose in life was to go and buy music catalogues, hold on to them, earn the income, and hopefully as well see the value of those catalogues go up through time. And it was a very exciting time. They raised a lot of money. The two companies were Hypnosis Song and Roundhill. About 3 years ago, however, the music stopped, pardon the pun, and interest rates went up a lot. And investors who had been able to earn a 7 or 8% dividend from investing in these companies could suddenly get a 7 or 8% coupon from putting the money in a Tesco's bond or lots of other places. So a lot of the excitement came out of these names, and we could buy them. We turned up buying both of them at big discounts to the book value, 40% discounts. So we're buying the portfolios at roughly 60 cents in the dollar. Now, it was a rather esoteric asset class, and Tim and I did a huge amount of due diligence on the asset class and the companies as well before we made an investment. And you can see our buying periods in the grey. And I think last time we were out here, we were just talking about Roundhill. So the Hypnosis Song hadn't happened. Roundhill was a relatively small company. We'd bought a reasonable size, but not a very meaningful size. And not long after that, there was a takeover bid at an enormously higher price. I think plus 50% to our entry price in a very short period of time. It was obviously very exciting, but it was, I guess the frustrating thing was because Roundhill was a small company and we hadn't been able to get a lot of stock in it, it wasn't very meaningful for the GVF portfolio. But the thing that really helped was that it really, I think, for the team and I, validated all the work we'd done. It's one thing to sit in a corner, do days and days of work in an Excel workbook and come up with a number that you think's the right value for these portfolio. It's another thing to see someone come in and say, actually, I'm going to pay you a cash price for that portfolio 50% higher. That gave us a lot more confidence in Song. Now, Song, the Hypnosis Song, the grey line, is it? Has been a much messier story. I won't drag you through it all, but
so this is where we were visiting October last year, and that's what's happened since.
This very messy story. So basically, it's a much bigger portfolio. We're able to build a much bigger investment for GVF. This really became quite a meaningful position in our fund. And the optics and the backstory looked bad for a very long period of time. Essentially, the manager, in our view, hadn't looked after shareholders in the right way and had done a few kind of dubious things along their way. They'd signed they'd done a partnership with Blackstone, the big US private equity group, and there was a backstory here where Blackstone were essentially trying to get their hands on the catalogue or the best parts of the catalogue at a tremendously, in our view, a tremendously unfair price. They were trying to diddle shareholders, in our view. The optics in the press were terrible. The share price kept going lower and lower and lower. We kept buying and buying and buying. We're very confident in the underlying value. And one of the things that we can do well is constructivism or activism. And we were very active in the background here. And us, along with a group of other shareholders, during that time, changed the composition of the board. The chairman left, and we actually brought in the chairman of Roundhill, the company that had sold itself for a big premium. There was also a lot of other negotiations with the management and a lot of kind of positioning behind the scenes, a lot of hard work that we did. It was, however, a real test of our conviction for a while. You can obviously see how it's ended, but before that, There was a lot of stock coming at us at progressively cheaper prices. We kept our nerves. We kept buying the stock at what we thought was a very exciting level. And we thought it would be something that play out over a few years, that we'd sort of slowly liquidate the company, sell the catalogues back to the market at a fair price and realise our investment over maybe a 2 or 3 year window. However, it's tremendously exciting and pleasing to say that a bidding war has started. It started last month in April. We've had 4 takeover bids at progressively higher prices. And because it was a much bigger position in GVF than Roundhill, it's really made a big difference to our returns. In April, we were up, GVF was up a bit over 2%, global share markets were down roughly 3%. So you can sort of see the swing factor that this one investment had. So very satisfying that we stuck to our conviction, and a little surprising that it's paid off as quickly as it has. But it's been a nice, if an emotional journey, it's been a nice journey.